I feel like my advice is the same as my advice has always been, which is like elevate meaningful stuff. There's just all of these projects, like even the ERC 4337 team, right? Like they don't have a token, they don't have a glamorous marketing department. They're doing stuff that like I think could be revolutionary, that I think could greatly improve the Well, this time I'm actually going to talk about other stuff, like basically, kind of a longer term future of the Ethereum protocol and my hopes that we, do the upgrades that we have to do, but also don't normalize, like just constantly adding more and more features, because that'll like make the protocol super complicated after like 20 years. Just kind of thinking about, what is the vision for the medium term? What's the vision for the long term? How can we make sure that we sort of shift gears into like actually valuing decentralization more and like, not just as a slogan, but like as something that gets a lot of development effort. Yeah, I mean, I'm definitely relieved that, things are quieting down a bit. And I think, it is important to remember that, these bubbles and boom periods, like they have costs. Like on the one hand, they attract lots of people, which is good, and they get people excited. But on the other hand, they sometimes give lots of people like way too much of an impression of what the space is promising, and that leads to people getting disappointed sometimes. They get attention from unsavory characters. They get attention from, governments that decide that because it exists, it's their business. And I think the scalability stuff definitely didn't come fast enough for this cycle, but I think for when the next one comes, like it all will be, right? Like we've already been seeing lots of improvements in rollups. We've been proto-dank sharding is advancing. Validiums are advancing. The ZK rollups and ZK EVM stuff is advancing. A lot of the stuff that I was like yelling about for the last few years, people seem to kind of finally slowly be taking seriously. So like one example of this would be, I remember just yelling at, like, I think both Optimism and Arbitrum people for a while, basically telling them, hey guys, like, you need to care about compression and you need to care about BLS signature aggregation. Because, like, those are the two things that you need to do to actually bring down the data cost of a rollup transaction from, like, 100 to 200 bytes down to 16 bytes. And, that stuff's actually happening, right? Like, Optimism, I think a couple months ago, added like basic 0-byte compression, which knocked their fees down by like somewhere between 20 and 40%. So like smart contract wallets would be able to like basically specify and say like, hey, this wallet uses like BLS signatures or uses like snark aggregation or some signature aggregation, and miners or nodes that are kind of gathering those transactions, they wouldn't just be packing transactions, they would actually be taking the signatures, aggregating them, and like it would all actually add up and the aggregation would work. And that's really nice because then you get like you get all the space savings, like, we're talking about like a 65 bytes of a transaction, like going down to 1 byte. And then once you add some more compression, then it goes down even more. And like basically, we're talking about rollups getting potentially another 5 times cheaper. Well, with just the ERC 4337 stuff, like, it'll be another 3 times cheaper, but with that and more compression, it'll be like somewhere between 5 and 10 times cheaper. There's just ongoing improvements to Ethereum software, and like you're finally getting to the point where the system actually will be able to handle the just incredibly massive amount of usage that like an actual quote mainstream adoption cycle is going to demand. So I think there's kind of these two opposing pressures that we as a community have to deal with, where one is kind of this pressure that speeds things up because there's more awesome researchers, there's more awesome developers, there's like a lot more effort going into all of these problems, but then there's also the pressure slowing us down, which is like the desire to not break things, the desire to kind of implement stuff across multiple clients. Like when Ethereum launched, it did not have like this massive ecosystem of block explorers and like side infrastructure that the Beacon chain has already. So I think like both of those pressures exist, and like to some extent that's healthy, and like to some extent this actually gets into stuff that I'm going to talk about in this presentation, which is that I think it's like healthy for Ethereum to have a bit of a move fast and break things attitude, like specifically over the next couple of years, because like, you know, we do need to radically change stuff, right? Like switching the consensus algorithm, moving over to sharding, moving over to like a very different model for how transactions get included. But at the same time, there's kind of this longer term desire where, you know, we do want L1 to kind of settle down into something that's like very stable, independent, and it's not something that kind of wins by outmaneuvering the alternatives. It's something that wins by outlasting the alternatives. So all of the good work that needs to be done to kind of get through all of these kind of big stages at the beginning, and at the same time, like there's also this question of like, you know, how do we properly set ourselves up for kind of this longer term future where the layer 1 starts to become this a bit of a more static thing, and you know, the improvements are more incremental, they're more kind of you know, technical and safety oriented, and once that happens, then, you know, Ethereum will just get slower, and that's fine, right? But then, you know, layer 2 work is only gonna get faster, I think. Like we've seen already, there's like 5 ZK VMs now. Things are going well, and I think, you know, and if the recognition that stuff like the merge does actually need to happen on a timetable, like I think that's also something that's picking up. The recognition that you know, things like scaling are something that needs to kind of happen on a timetable, right? Mm-hmm. And you know, as I think I've sometimes like said before, like you know, you can lose $1 billion from a hack, but you can also lose $1 billion from everybody just needing to pay way higher fees than they have to, mm-hmm. And one is one is more flashy and glamorous, but you know, the other is also actually a really serious kind of drain and tax on the ecosystem. Just constant good news every couple of months, and you know, I'm confident that we're actually getting to an Ethereum that's pretty great. It's looking more and more like, hey, this thing is going to actually happen, and once the merge actually happens, then you know, I expect like morale is going to go way up, right? Like I basically expect that the merge is going to be kind of not priced in, by which I mean like not even just like market terms, but even just kind of like psychological and narrative terms. Like, you know, we see even today, like a lot of people kind of act as though, hey, you know, this environmental issue is this fatal flaw, and mm-hmm. Yeah, sure, Ethereum mumble some noises about proof of stake, but come on, they've been saying that since forever, and it's not going anywhere. But like, no, it's going to go somewhere. Right. And at this point, I think the only way to just convince a huge number of people that it's going to go somewhere is just by actually going there. Once that happens, it's going to change a lot of minds. Right. I mean, I think one of the big lessons for the community has been around the kind of stablecoin and Luna stuff. Sure. Like, I think we actually got to a point where what we might call principles-based thinkers kind of got a bit demoralized, right? Because you know, if you're a principles-based thinker, then you're going to say anything that offers more than 10% APY is like basically unsustainable at best, a scam at worst, mm-hmm. Because you know, nothing in fiat lands can stably offer 10% returns, right, with like very low risk of losses. So why the hell do we think the crypto space can do better, especially given that there isn't really kind of much of a real economy backing up those growth rates? Like, that's demoralizing, right? Because like, I think a lot of people even started thinking like, wait, okay, you know, maybe we're in a new paradigm, and maybe this whole like sanity and logic thing actually is just a fiat world Web 2 prejudice. Mm-hmm. And then you know, boom, and Luna suddenly taught people that like, oh no, principles actually do matter, and we actually do live in reality. Mm-hmm. So I think, you know, I'm very happy that incident happened just in time. I mean, I wish that it had happened a few months earlier and blew up like $5 billion instead of 50. But you know, even still, it's better that it happened now than if it happened later when it could have blown up 500 billion. Right. Because like, you know, when something blows up $5 billion, it's like, okay, fine, it's a bunch of rich computer geeks and they're kind of playing around and it's their fault. At $50 billion, you know, people get more scared, but at $500 billion, it's, I mean, you know, there's just a huge pressure for, you know, all the big mainstream actors to consider the events to be their responsibility. And then, like, crypto is just going to completely lose its room to maneuver. So I think this is one of the reasons why, like, I've also never really joined this kind of enthusiastic desire to get a Bitcoin or an Ethereum ETF. This is not financial advice. You can lose everything that you put in, and all of that. And once you start kind of plugging it into mainstream infrastructure where like funds representing random 72-year-olds start throwing money into this stuff by default, then you're just entering a different ballgame. And like that's not really a ball game that we should be trying to enter that quickly.
Sure.
Basically, if you have to choose between kind of two regulatory evils, where one of those evils is, regulators coming in and telling the industry what it can and can't do, and the other one is the crypto industry gets freedom, but it gets firewalled off of, reality, then like I choose the second over the first like any day.
Right.
It's, even still, the collapse kind of reminded people that, like, yes, reality matters, that yes, fundamentals matter, yes, principles matter, yes, this thing that you're throwing your money into that promises 6% returns and has been consistently giving you 6% returns for the last, 2 years might actually be something that's worth getting out of. And it's, good that we learn those lessons. The question I sometimes, ask myself with, all of these weird opportunities is, taking a long view, right? What is the probability that nothing bad will happen to this thing over 10 years, right? And let's say maybe the probability is 75%. Okay, if the probability is 75% that nothing bad will happen over 10 years, 25% chance that it drops to zero, that's equivalent to an interest rate of negative 2.5%.
Right.
Are you really... is the difference that you're getting really worth a 2.5%? And often it isn't. For people to start thinking in that way, sometimes you do need to just have memorable examples of the bad thing actually happening. Right. The ability to just reliably hold your coins has been improving, right? We've moved from lots of crazy stories of coin theft in 2013 and 2014, and now things are better off with hardware wallets, and I think 2 years from now things will be even better with more social recovery wallets. That trend's going to continue, and I think the set of things that you actually can do safely is going to just keep going up more and more. And it's the sort of thing that we won't notice because the sign of that happening isn't news, the sign of that happening is lack of news.
Right.
But if once you kind of get that kind of skill of learning to pay attention to lack of news, it's an interesting skill to acquire, by the way. If you just try to get up-to-date information about any event where there's a lot of propaganda and a lot of highly incentivized discourse going on, listening to what doesn't get said is often one of the most revealing things. And here what's not getting said, well, there's industries that, or sub parts of crypto that used to be completely crazy that are just actually settled down and doing quite fine today. I feel like my advice is the same as my advice has always been, which is elevate meaningful stuff. There's just all of these projects, even the ERC 4337 team, right? They don't have a token, they don't have a glamorous marketing department. They're doing stuff that I think could be revolutionary, that I think could greatly improve the state of wallet safety, and could even make optimistic rollups 3 times cheaper.
Sure.
And people like that deserve some love.